Welcome to Value Vest Daily. Today, we are strapping in for what might just be the single biggest financial event of our lifetime. We're talking about an IPO so massive, it could completely redraw the map for public offerings. Of course, I'm talking about SpaceX.
But before we blast off, we have to do the quick, important disclaimer. None of this is financial or tax advice, okay? Everything we're about to go through is for educational purposes only. You have to do your own homework before making any investment decisions. All right, let's get into it.
So let's just set the stage here. This is not just another tech company going public. According to multiple sources, we are looking at, and I'm quoting here, the biggest IPO in human history is dropping in weeks. Just let that sink in for a second. We're talking potentially bigger than Alibaba, bigger than Saudi Aramco, bigger than any company that has ever hit the public markets. Ever.
And what kind of number gets attached to a statement like that? Well, how about this one? A potential valuation of $1.75 trillion. To give you some perspective, that would instantly make SpaceX one of the top 5 most valuable companies on the planet, right up there with giants like Apple and Microsoft, from day one. That is the unbelievable scale we are talking about today.
So how are we going to tackle this monster of a topic? Well, here's our game plan. First, we're going to really dig into that claim. Is this actually history's biggest IPO? Second, we'll pop the hood and look at Starlink, the cash machine that's driving this whole thing. Third, we'll get into the Tesla synergy effect and what it means for TSLA shareholders. Fourth, we've got to talk about the serious risks, the valuation, and the crazy volatility. And finally, we'll wrap it up with a potential playbook for you, the investor.
All right, let's dive into part 1. Is this really the biggest IPO in history? You know, it's an incredible claim, and it's so easy to get swept up in the hype. So what we need to do is put this into perspective with some real numbers to see if it holds up.
Okay, just look at this chart. It says it all. That little bar on the left, that represents the combined value of every single company that went public in the entire year of 2025. Now look at the bar next to it. That's the projected valuation of SpaceX, all by itself. It doesn't just beat the market, it makes the entire previous year's market look tiny. This really hammers home that in 2026, SpaceX isn't just participating in the IPO market. For all intents and purposes, it is the market.
So, the big question is, when could all this actually happen? Well, the timeline is getting pretty clear. Multiple reports are all pointing to the same sequence. We're expecting that confidential filing with the SEC, the S1, to drop sometime in late March 2026. That's our first look at the real audited numbers. Then, the public debut is being targeted for mid-June, which, just so happens to be right before Elon Musk's birthday on June 28th. Coincidence? Maybe. For investors, though, the countdown is on.
So that brings us to the real head-scratcher. Where on earth does a $1.75 trillion valuation come from? And that leads us straight to part 2, Starlink, the cash machine. See, to really get this story, you have to look past the amazing rockets. They're spectacular for sure, but the real financial engine driving this valuation is something else entirely.
The growth of Starlink, SpaceX's satellite internet service, has been nothing short of explosive. I mean, what started as just a small beta program a few years back has scaled at a mind-boggling pace. As of this February 2026, it has already blown past the 10 million subscriber mark across the globe. So this isn't some far-off dream. This is a rapidly growing global utility being built right before our eyes.
And this chart of the 2026 revenue mix really tells the story. Starlink is projected to make up almost 79% of the company's total revenue. Think about that. The traditional SpaceX business, launching cool rockets for NASA and others, is now the small slice of the pie. The key thing to understand here is that Starlink is not a side project. It is the absolute financial core of this whole operation, on track to pull in over $18 billion in revenue just this year.
And this strategy leads to a really powerful way of thinking about it. SpaceX is building the picks and shovels monopoly for the new space economy. You know, back in the gold rush, the people who made the most reliable money weren't the ones digging for gold. It was the folks selling the picks, shovels, and jeans. SpaceX is doing the same thing for space. They want to own the essential infrastructure, the internet, the launch pads, the in-orbit computing that everyone else is going to need to build their own space businesses.
And just when you thought the plan couldn't get any bigger, they add another incredible layer, the XAI merger. By pulling in Elon Musk's AI company, SpaceX is signaling a future that is way beyond just internet. The vision here is to create orbital AI supercomputers, using that massive Starlink satellite network as a giant space-based brain.
This move also creates a direct financial tie to Tesla, which converted its $2 billion investment in XAI into a small but direct ownership stake in SpaceX. You can start to see how all the pieces are connecting into a much, much bigger picture.
And that financial link leads us right into part 3, the Tesla synergy effect. And this is where things get really fascinating, and it's a topic that thousands and thousands of Tesla investors are watching like a hawk. Because let's be honest, when one of Elon Musk's companies makes a big move, it sends ripples through all the others. So the billion-dollar question, or maybe trillion-dollar question is, what does this IPO mean for Tesla?
You can really think of this as two completely different stories for Tesla investors. On the one hand, the bull case is all about these incredible synergies. Imagine Optimus robots using Starlink's global data to learn, or a future robotaxi fleet with its own dedicated instant communication network. On the other hand, the bear case is pretty scary. The insane volatility from SpaceX stock could easily spill over and infect Tesla, and the number one fear for many is the risk of massive, massive shareholder dilution if the two companies ever decide to merge. So, if we look at the bull case, you've got big Wall Street analysts like Dan Ives from Wedbush calling a full-blown Tesla-SpaceX merger as early as 2027 a logical next step. From their point of view, you combine Tesla's dominance in EVs and robotics with SpaceX's space-based AI and communications, you create a company with a competitive moat so wide nobody could ever cross it.
But, and this is a huge but, there is a very sharp counterargument. Analyst Gary Black lays out the cold, hard math of the bear case. His calculation shows that a merger at these valuations could wipe out something like $750 billion in Tesla's value just from dilution alone. Basically, unless the market gives this new mega company a gigantic premium, existing Tesla shareholders would see their ownership stake shrink dramatically. We're talking about a high-stakes argument with nearly $1 trillion on the line.
And that high-stakes debate brings us right into part 4, valuation and risks. Look, we've talked about the incredible upside, but an opportunity this big always comes with equally huge risks. It is absolutely critical that anyone, even thinking about this, goes in with their eyes wide open to the high-stakes game they're about to play.
There are 4 big ones you have to consider. First, that $1.75 trillion valuation means it's priced for perfection. There's zero room for mistakes. Any tiny slip-up in Starlink's growth, one launch failure, and the stock could get hammered. Second, you've got the Musk effect, which guarantees extreme volatility. Third, there's the rumored thin float. If only 3 to 4% of the shares are actually for sale, simple supply and demand means tiny trades can cause massive price swings. And finally, you have the classic post-IPO price dip, which happens all the time as the initial hype wears off.
So let's try to put a number on that Musk effect. Analysts are actually forecasting daily price swings of 20 to 30%. 20 to 30% based on a single tweet or headline from Elon Musk. To put that into perspective, Tesla is already seen as a crazy volatile stock, and it might move 10 or 15% on big news. We're talking about potentially double that level of volatility. You have to be ready to stomach that kind of wild ride.
So after all that, the historic scale, the Starlink engine, the Tesla connection, the massive risks, how in the world should a regular investor even start to think about this? Well, that brings us to our final section, the investor's playbook, where we'll walk through some potential strategies. Now, one of the most interesting rumors floating around this IPO is this number right here. The deal is reportedly being set up to have a retail allocation of 30% or even more. This is really, really unusual. Normally, for these mega IPOs, almost all the shares go to the big Wall Street institutions. Saving a huge chunk like this for individual investors could be a total game changer for access.
So a possible retail strategy could break down into 3 key steps. Step 1, watch for that official SEC filing like a hawk. That's the starting pistol. It's the first time we see the real audited financials. Step 2, maybe consider being patient. Instead of FOMOing in on day 1, it might be smarter to wait and see if there's a post-IPO dip that could give you a better entry price. And step 3, and this is crucial, understand your allocation. Those rumors about preferential access for existing Tesla shareholders are very strong, and if they're true, that might be the main way for many people to get a piece of the action.
And all of this leads us to the final bottom-line question that every single potential investor has to ask themselves. We've laid out the case for a potentially life-changing astronomical return, but we've also been very clear about the extreme volatility and the sky-high valuation that demands perfection. So the question you're left with is this. Is this potential 100x rocket ride worth the extreme risk of a catastrophic failure? And honestly, that's a decision that comes down to you, your personal finances, and your tolerance for risk.
Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. We'll see you in the next one.